What's going on, Skyview? It's Christos, and it is May 9th, 2017. Today, the SPY is down a whopping 0.02%. I feel like I've said that on every single one of my last videos. It seems like the SPY has pretty much been doing nothing for weeks. If we scroll in a little bit, you can see we've basically been sideways for literally 2 weeks now, a week and a half or so, and it has been pretty boring, pretty lackluster. I've been commenting on the volume. Remember yesterday I was commenting on the volume here, how it was probably going to be one of the lower volumes days for the weeks and months ahead into the summer. And today is kind of shaping up to be one of those days too. There's only about an hour and 10 minutes, 2 hours and 10 minutes left in the day. So maybe we'll get to around the same volume point as yesterday, but nonetheless, another very low volume day in the market, only around 26 million contracts traded of the SPY, and a normal day is more like 100 million. The VIX is still looking pretty pathetic, still in the 9 handle here, and still at these historically low volatility levels that we've been at. So still the same environment, nothing has changed, kind of stinks, even though we got paid very nicely yesterday because of the huge volatility contraction in the market. That's great and all, but we still need to stay active, right? We still want to put on trades, and it's kind of tough to find trades when you've got a VIX under 10, or at least tough to find trades where we can trade small. You know, there's definitely been a lot of $5 wide iron condors, but I've been trying to trade a little bit smaller just because of this volatility level. So other things like iron butterflies, those usually have less risk, obviously have less risk because they have a lower probability of profit, but it's still just another way to trade small. So that's probably kind of what I'm going to be looking for, either some type of iron butterfly or like a $4 wide iron condor if I can find one here. Now, I was looking through the stock watch list here because we do have a lot of these ETFs on, and kind of just looking to add some diversity here and add some stocks to the portfolio. Lulu actually does have earnings, even though it does not have a little earnings icon here in the watch list, but we can see right here that earnings are on 6/7, so that is within the June cycle, and that is a pass. The rest of these seem to have earnings. Apple has been on an absolute tear lately, and I believe that's because Warren Buffett came out the other day talking about how Apple is a buy, and so are all the other FANG stocks. FANG stocks are FANG, Facebook, Apple, Netflix, Google, so basically that technology sector. You could put on a trade in Apple. We do have a trade on in Facebook. Let's actually see how that one is doing right here. So down a little bit for the day, but we sold this for $1.19, and the mark right now is $1.17, $1.18. So still hovering around that break-even range. We are just fine, and we actually skewed this a little bit to the bullish side. So because Facebook and Apple and all of those NASDAQ stocks are kind of rocketing to the moon, it's allowed us to at least stay in the ball game here. And if we scroll in, you can see that we're still well within our max profit area, and everything's just fine there. But as far as getting a new trade on here, like I said, you could do something in Apple. I think I'm going to pass just because we have that Facebook position on, and because I don't know, it's just been on a tear, and I'd rather kind of sit this one out, so to speak. You know, I'll let someone else make all the money in Apple. Maybe we'll put one on a little bit later, but it's been skyrocketing and volatility has increased on top of it. So someone pointed that out in the chat room today. Usually it's supposed to be an increase in the stock price results in a decrease in IVR, but we didn't see that. We got an exact correlation here with a rise in IVR and a rise in the stock price, and I'm assuming that's just because of all the news and the fluff surrounding Apple with Warren Buffett's comments the other day. So I think I'm just going to let that one be, see what else we can find. SPG, I think I was looking at something in there the other day, or Maybe the market's just not great in SPG. Let's take a look. So we'll go to SPG. And the markets, yeah, they're just not great. 445 by 480 and 415 by 440. I really like to see these spreads under 10 cents or so, 5 to 10 cent range. So this is a little too wide for me, at least right now in the current market environment. Looks like those spreads opened up. Amazon, also something I'm not too interested in. Facebook, we have a position in. Dow, also one of those wide market stocks as of lately. Let's just check out the markets in here. Go to the at the monies. And 266 by 282, 68 by 78. So they're not, terrible, but they're definitely not great. And I just don't trade Dow too much. So I'm going to pass. Google, not too interested in. Baidu, a few guys have a Baidu Iron Condor on already in the chat room. We did not put that one on, but that one seems to be working, and they are kind of already up 20 cents on it or so. So I don't really want to get in the same Iron Condor at around $1 when I could have collected like $1.20, $1.30 a few weeks ago. I'm going to let that one go. Not really too interested in these. Verizon, couldn't really construct anything in there the other day. Nor could I in CBX or GPS. Qualcomm I looked at. SLB I tried to put on a position in there the other day, yesterday, but no fill. And Halliburton is also one I was considering yesterday with SLB. These were in my personal accounts. Not the Skyview account here, but I could not get it on in SLB, and I just didn't even really try in HAL. But let's take a look at what HAL is doing. We got the 12-month at 26, 6-month at 29, 3-month at 37. So pretty decent. That's kind of what you'd expect in a low volatility market like this. Stock price hovering around 45. So let's take a look at this. HAL is one of those I trade fairly often. Let's go ahead and see what we're working with here. So only $2.50 wide strikes, so we could even set up an Iron Condor and trade small, but when I see option prices like this, I'm kind of more inclined to default to an Iron Fly. And since we are hovering right around that 45 area, I don't really have a directional opinion on this at all. I think somewhere around this 45 area is a decent way to play it. If we don't play the 45, we'd have to play either the 47.50 or the 42.50 as our short strikes for this Iron Fly. So 47.50 would really be skewing it to the bullish side. That would be up here. And 42.50 really skewing it to the bearish side. That would be down here. I don't really have a directional assumption. I'm thinking just to go straight neutral on this trade. Just trying to stay active and trying not to do so with overly large size. So let's go ahead and short the 45 call and put on both sides. And remember, that makes a straddle, but we don't want a straddle, so we just have to buy the wings so we can spread out our risk and make it a defined risk spread. So let's just go ahead and go 5 points wide. So 5 points wide from 45 takes us to 40, and that also takes us to the 10 delta here. So that's right about my wheelhouse. I'll go ahead and I'll buy that one, and then we'll go 5 points wide to the upside from 45, and that takes us to 50 here, and 50 would also be the 10 delta. So once again, that is right in my wheelhouse. So go ahead and click on the ask there. And I like to collect over $2 on my Iron Flies. You can see we are collecting $2.53 on this one. So $2.53 is about half the width of the spread. We have a $5 wide spread here, and we're collecting $2.53, so we're collecting about half of the spread's width. That in turn gives us a 50% probability of profit, but remember, that is before managing. So managing this trade early is going to greatly increase our probability of profit, And because we are collecting a higher credit on these type of trades, we like to manage them even more aggressively, even more aggressive than 50%. We want to manage them for around 25%. So why don't we go ahead and try to route this order right now, and then we'll go to the chart and kind of draw in our break evens and stuff like that. So this will work. And this will be a max profit of 254 and a max loss of 246. So there it is, max profit 254, max loss 246. And I like to edit just to see what I'm working with as far as the spread, about a 5-cent spread. So of course we're going to try to get filled right at the mid price. So we'll go in there first, make sure my volume is on. So if we are filled, we do hear it. And nothing yet. So why don't we sit there for a second and just go to the chart. Maybe it'll fill while we're talking here. And we'll just draw in some price slices. If you want to skip this, I'll have a little bubble that pops up, tells you where to skip this. But first of all, we know our neutral range is 45. So, or a sweet spot, 45. And then edit the properties. So this 45 is our neutral sweet spot zone. Okay, and then since we collected 254, or we're trying to collect 253 on this, our break evens are $2.53 above our short 45 strike call and put, and $2.50 below our short 45 call and put. So 45, $2.53 above is going to take us to 47.53. So I can just go ahead and put that in there. And this is our break even to the upside. 47.53. And we'll change the style on this. Okay. And then $2.53 down from 45 would bring us to 42.47. So 42.47, somewhere around this area. Edit the properties. 42.47 if we are filled at that 253 mark. Oops, and why don't we go ahead and edit the style here. Here we go. And then our max loss point to the upside is anything above 50. So we will make this a red line, right? Red line to signify that we do not want it to go up there. And also change the style. And then our max loss to the downside would be right here, anything below 40. And edit the properties there. Red, 40, and we are all set. So there it is, guys. Anything between our break evens, which is around 42.47 and 47.53, we will break even anywhere within this range, or we will not lose a dime anywhere within this range. And as long as it does not exceed these dotted lines this way, we will at least break even, or we will not lose 1 penny on this trade. And then our max loss is anything above 50 and anything below 40. So these iron flies are nice because it's kind of another way to trade smaller, just because you literally have less dollar risk on each side. But of course, remember, there is a trade-off to that, and the trade-off is that we have a lower probability of profit on this trade. Remember, we're collecting around half of the spread's width, which in turn gives us a 50% probability of profit. But again, that is before early management. And since we are collecting such a large credit on this, or such a large credit in respect to the spread's width, well, we want to manage these even more aggressively. And our goal is around that 20 to 25% max profit mark is when we want to manage these. So still not filled on the trade. Let's go back to our working orders. and we see it, and it looks like the mid price has even gone up to 255, and we're just trying to collect 253. So looking like we're gonna have to move the order down if we want to fill. Oh, and there we go. I didn't even have to touch it. Beautiful. So here we are, filled at 253. And that's why it's nice to wait just a little bit, especially on these tighter spreads. This one's widening out a bit right now at 7 cents or so. But around those 5-cent spreads, if you just want to try at the mid price and wait a little bit and then move it down one and then wait another 5 or 10 minutes and just kind of play that game, I don't think that's a bad idea at all. So it's nice that we were filled there. We'll go to our monitor tab and we will see it. Here it is in our filled orders, and here it is down here in our position statement. So just trying to stay active, guys, and again, just trading a little bit smaller with a little bit less risk on the table, just because we are in these low volatility environments. But we have to stay active, right? If we did not stay active, then we would not be up yield to date, because this whole year we've been in a low volatility environment, right? This whole year. So we cannot just stay on the sidelines. We need to stay active, right? We need to constantly be putting on positions, but we just want to trade small, especially right now in these crazy low volatility environments. So that's about all for this video, guys. I hope you learned something from it. Thank you for listening, and until the next video, take care.